Yasir Al-Rumayyan, the chairman of Saudi oil producer Aramco and the governor of that country's sovereign wealth fund, was appointed an independent director on the board of Reliance Industries on July 19 for a period of 3 years. The appointment has now come up for shareholder vote and the voting process will end on October 19. Based on the recommendations of influential American proxy advisor company Glass Lewis, the California State Teachers Retirement System, Cal-STRS, has decided to vote against Al-Rumayyan's appointment. Cal-STRS is the largest educator-only pension fund in the world and the second largest pension fund in the US, with about $318.4 billion worth of assets under management. As of June last year, Cal-STRS held 5.3 million fully and partly paid shares of Reliance. This holding is valued at $179 million today. The fund has cited potential conflict of interest as Reliance plans to sell a 20% stake in its oils to chemical business for $15 billion to Aramco, where Al-Rumayyan is the chairman. The deal was supposed to close by March 2020, but it got delayed. It is in its final stages at present. Given his connection with the Saudi government and the proposed business relationship with Reliance, proxy advisors Glass Lewis said it did not consider Al-Rumayyan as being independent at this time. In fact, it is not just Cal-STRS which is opposed to the appointment. The Florida State Board of Administration, which manages $245 billion, is also against it. Further, Saudi Sovereign Wealth Fund headed by Al-Rumayyan has already invested $1.3 billion in Reliance Retail Ventures and $1.49 billion in Geo Platforms. Reliance Retail Ventures is a Reliance Industries subsidiary that owns the group's retail businesses, while Geo Platforms is Reliance Digital Services unit. In a communication to proxy advisors firms, Reliance strongly defended its move, saying Al-Rumayyan's appointment had no connection with the proposed deal with Aramco. Further, the O2C business was being spun off into a subsidiary which might have nominees from Aramco. Reliance also said its Human Resources Nomination and Remuneration Committee, which had 4 independent directors in its total strength of 5, unanimously recommended his appointment, given his versatile experience. Now let's go to InGovern Research Services Sriram Subramaniam and Vidhi Legal's Debanshu Mukherjee for their views on the issue.
Reliance Industries, in any event, has said that we'll have to see as to when the deal fructifies, that is the investment of Aramco into the O2C subsidiary. And 2 is they have also indicated that they are open to reviewing the categorization of the director at a later. Section 149 of the Companies Act is very specific in the definition of an independent director. From that perspective, the director being inducted onto the board of Reliance Industries would be termed as an independent director. We don't see a conflict of interest from the perspective of that definition.
On the face of it, and at least perceptually, it appears that there is a conflict and he's not independent. But technically, since Aramco doesn't have any direct investment in RIL, he appears to be independent. And RIL is also saying that Aramco investment will actually come in a subsidiary eventually, and not the company where he's being appointed. And therefore, there should be no question of a conflict. Now, technically, they might be right. If you look at the relevant provisions of the law, an independent director should have no pecuniary interest in the company where he's being appointed or a subsidiary. Now, the question here is, can investment by Aramco in a subsidiary, whenever it happens, disqualify him from being an independent director in the parent company? Well, they'll argue that he's not personally investing in the company. So, so it's Aramco which is investing. So there is no question of a conflict whatsoever. And the same logic applies to his connection with the group through the sovereign wealth fund that is invested in some of the group companies here. Legalities aside, if you look at the bigger picture, one might argue that he appears to be more of a nominee director of an investor or a business partner. And typically a nominee director is not seen as an independent director. There is clearly a loophole here. There seems to be nothing in the law today to prevent such appointments from taking place. And as we know, independent directors enjoy better protections in terms of liabilities when things go wrong. And so this might be a good opportunity for the policymakers to reevaluate the existing legal framework and limit arbitrage opportunities of the sort that we are seeing now.
The Mukesh Ambani-led company has so far not addressed the concerns around Al-Rumayyan's connection with the Public Investment Fund, which has investments in Reliance subsidiaries. Now, the question that remains is whether the investors will be satisfied with Reliance's justification, or will they force India's most valuable company to reverse the appointment of Al-Rumayyan? Let's wait and see.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.